Welcome back to Decay Factor. The E-mini S&Ps are down about 0.5%. VIX futures are climbing and the market feels pretty quiet overall today. Let's dive in. Welcome back to another episode of Decay Factor. Today is September 5th, 2025 on a Friday. So let's go ahead and hop into the portfolio and see what's happening in the market today. The E-mini S&Ps are down by 0.56%, with the VIX futures up 2.54%. The SPY is down 0.54%, with the VIX up 4.58%. Let's take a look at the chart here to get a little bit of context here visually. Again, you can see we're trading still within this tighter zone. Not a whole lot of movement today, but today's a down day. You know, it is what it is. Let's look at the VIX futures. The VIX futures are up ever so slightly, but if you compare where we're at right now with where we were a week ago, you know, an up day in the VIX futures is kind of, you know, a down day from a week ago or slightly more than that. Let's take a look at the VIX to compare where we're at there. We'll zoom out just a bit here so that we can see the whole year. And we can see here, if we put our little line right there at where we're trading today in the VIX, you can see that we've been lower in the last 52 weeks, but we've also been much higher. So the risk is to the upside in VIX, most certainly, as it usually is. All right, let's take a look at our activity to see what happened since our last episode yesterday. You'll remember that we opened a position in Pepsi yesterday, so that one we already covered. But we also have one here for ETHA, which we were filled for a 50-cent debit as a good till cancel order. This TIF means time in force, so it was a good till cancel order this morning at 9:50 a.m. And this was a buy to close. So let's just kind of recap what that was. Let's go take a look here at ETHA, and we'll go over here to the options chain. And we'll see here that these dates just drive me crazy because we didn't open it and close it on the same date. So let's take a look here at ETHA here. And we opened this position, so you'll see here a sell to open, buy to open. We sold the 38 call and we bought the 41 call. Both of those legs were open for $1, and we did that on 8/22 on August 22nd at 1:16 p.m. We collected $1, and then we closed it out today for 50 cents, which means we made our 50% of max profit, which was our target. Today being 9.5. So that one worked out well for us. Did exactly what we wanted it to do. You can see here we didn't really have any big movements in this underlying either. We had a down day today, or we're having a down day. But you can see it's just kind of trading here like in this zone, which just proves that this strategy is not a super directional strategy as long as it kind of stays where we want it to be. It can be directional, and it's a little bit more directional than totally delta neutral iron condor or short strangle or something like that. But the interesting thing about this one was this was a short call spread. I actually wanted the market to go down. When did we say we put it on? 8/22. Let's go back here and look at 8/22, which was right about here. Yeah, see this big green bar here? That's when we put it on. And it did come down from that a bit. But you might look at this chart and think you are absolutely crazy putting on a short position, meaning a short delta position in an underlying that has just gone up and up and up and up. But look how it played out because we used probabilities. All right, let's go take a look at our positions tab. Here, we're going to make sure we're sorted alphabetically. And let's see what we have. So we only have one, what we could call a problem child right here. I mean, you can define that in different ways. Another problem child definition might be, who's down on the day. But I'm really looking for positions with legs in the money, and Chipotle has two of those. We can see that Chipotle has actually gone further down, which is not what we wanted to do. But you can see here, we had a string of down days here in Chipotle. Just, gosh, a lot of down days. All the way from here down to here, a little bit of a rally here, and then back down. And this is where we're trading, 40.85. So we want Chipotle to rally. We want Chipotle to come up to at least 44. Like, if you can get to 44, we'll be happy. So from a visual perspective, 44 is right around in this ballpark, and it's totally reasonable that Chipotle might get back up to that range in the next, let's call it 21 days. All right, but nothing we have to do there today. Let's take a look at DTE. Everything is 42 DTE. Nothing to do there. IV rank, we have two here that are below. We have IBM and we have Chipotle, both of those being defined risk spreads. So nothing we need to do on either one of those. And then on earnings, we have earnings piling up in October, but that's over a month away. So we didn't even need to spend any time talking about any of that. Let's go over to the watch list to see if there's any opportunities for us to put on any new trades today. And I'm going to select the 4-star liquidity rating here, so that we're only looking at those, and we're sorted by the IV index 5-day change, and we see SOC. We already know not to touch that because it's not trading, and we can't open any orders there, positions there. We can only close positions. mRNA, we already have a. Did I sort this? Yeah. mRNA, we already have a position. GDX, we have a position. CNC, we have a position. Coca-Cola, let's take a look. This one didn't pan out for us before, but you know what? For diligence, let's hop out here to the 42 days. We're going to go over to the table tab. We'll stretch out these strikes to the, let's call it the 11 and 15. Not enough premium at 59 cents. We'll skip gold because GLD because we already have a position in there. XLP, let's take a look at this one. And it's an $80 stock with a 47.9 on the IV rank. And we need to move our expirations up to the 42. We're going to go down to the 17 delta on the puts, 16 delta on the calls, only collecting 64 pennies with a buying power effect of $1,300. No, thank you. And then LQD, we know doesn't pan out for us. And ETHA, we just closed a position in. Yeah. So let's take a look then at a step down from that. Let's go to the watch list here. We're going to check the 3-star, uncheck the 4-star. And we already have a position in Pepsi. IndieX, we're not going to put a position in. Barrick Mining is red. So yeah, that was an easy one. No opportunities today for us to put any new positions on in any of these underlyings to collect additional theta. So we just have to wait for this chart right here to give us some premium. Let's get back up in here into the 20s. Let's get into the low 20s. That'll give us some premium to work with without being too crazy of a market. But with the market, flirting with all-time highs up here. In fact, it looks like we today made all-time highs, even though we came down off of those. There's just a lot of complacency and not a lot of opportunity for short premium sellers right now, but no worries. That's what we do. We stay consistent and we stay patient and we wait for those opportunities. And when they come, we pounce on them. All right. Join us again on Monday for another episode of The K Factor, and we look forward to seeing you then. Thanks for watching.